Well, it's official. The 2019 Yahoo Finance Company of the Year is Target. Despite a dizzying series of investments in stores, people, process, and product over the last 3 years, profit margins have magically sprung to life. This has led shares of Target to jump nearly 90% since January as the retailer continues to successfully navigate a very competitive retail sector. So, Andy Serwer, editor-in-chief, why do we do the Company of the Year? What's the process, I guess, as Yahoo Finance collectively tries to find the company that says to us, this is the Company of the Year we have just completed?
Well, I think we do it, you guys, because we want to have something that's sort of emblematic, right, in a way, to recognize everything that's happened in the year. And it's, of course, almost impossible to do that with one name. There are so many stories, and we'll get into that a little bit. And we pick the company by both subjective and objective measures. Objectively, of course, we start with that stock price that you mentioned, up 90% this year. So that's a screen that we run. But we don't just do that because, of course, if you pick the number one stock, it's going to be some tiny Canadian mining stock. And it's maybe a little less interesting. Nothing against Canadian mining stocks, mind you. But anyway, we want something that people can really kind of hang their hat on in terms of it being a theme. And so we have a number of candidates. Maybe we'll talk about some of those as well. And so then we also look for not only how the stock does, but what did the company do? And how did they really move the needle in their business and maybe even with business writ large in the United States and around the world? And
Sazi, you went out to Minnesota, you talked to Target executives. It's a retail fairy tale, to use your framing on this. What do you see in this story that makes it a fairy tale in a world where we're still in the retail apocalypse, right?
And part of the selection process too, just playing what Andy said here, there's some intangibles, at least for me. How in the world did Target put this type of year up, considering they're not operating in a silo? You have Amazon and Walmart out there, but we put pretty much that question to Target CEO Brian Cornell.
Virtually across every one of our major categories. So every time we have an earnings call, I always talk about things that I think are so important to the health of the brand. One, growing traffic. So when I think about our most recent quarter, our comps were really strong, over 4%. But it was driven by traffic growth and more footsteps in our stores, more visits to our site. It's driving market share across all of our major categories. So to be able to sit here and say market share in apparel and in home, in toys, in food and beverage, in household essentials, big market share gains in categories like beauty. It just shows the health of our model and the uniqueness of our multi-category portfolio, which I do think is distinct in the retail business today, where 20% of our business is apparel, 20% is home. We're a 25% player in toys alone. We've got a big mix of our business in household essentials and about 20% in food and beverage. So we've got the diversity of our portfolio that really gives you a reason to shop Target each and every week.
Where are the market share gains coming from? Is it malls? Is it traditional grocery stores?
It's a combination of both. So we don't get all that granular data to say, all right, where are we winning and pulling? But obviously, we're picking up market share from all of our competitors, both big and small. And again, when we get that combination of great inspiration, make it really easy to shop Target, either in-store or online, deliver great value, when we do that across the box, we're picking up market share from all of our competitors.
All right, so we all know that Target has had a great year. Obviously, we'll get into that a little bit more. But Heidi, let's talk about some of the companies that weren't named Company of the Year that we all discuss kind of around the office and offhandedly. Hey, maybe they're really the best company this year. A name that I think stands out to both of us would be Chipotle, led by another Brian.
Right, Brian Nickel. But it was really neck and neck when we talk about the other contenders for this year's Company of the Year, namely Microsoft, like you mentioned, Chipotle, Beyond Meat as well. But who doesn't love a good turnaround story? I feel like this year was truly a year of turnarounds when we look at Chipotle, turning around its company, becoming sort of a leader in the food space. Then we have Target, really despite the competitive retail landscape, it's not only survived the retail apocalypse, it's thrived, you guys. I mean, this company has really made a comeback. In Microsoft as well, it's back to being one of the most valuable companies in the world. So all of these narratives and all these stories were really, truly great. But when we think about the competitive retail landscape, now tech, of course, is also extremely competitive, but you're dealing with the consumer, right? The consumer is so important, but also very, very fickle. So Target really dominated it, and I think that it's truly deserving of this title.
You know, it's funny that you said the comeback stories, because a lot of the companies that have won in prior years faded, which is to say the FANGs. So we've kind of named a bunch of them in prior years as companies of the year. And so naturally these comebacks, Heidi, kind of filled that gap, right? Because you didn't have continued performance from the FANGs in 2019.
I mean, I guess that's the question for Target too. So now you've been on the cover of Sports Illustrated. Isn't that the jinx, right? That
You know what I liked about this
happen.
Target year is that a lot of this stuff is what they've done is fundamental in nature. You're not taking a Disney store out of a Target store. If anything, they will be opening up more of them next year. How they staff their stores, that's fundamental to their business. They're investing in new ways. You buy online, ship from store, that's fundamental to how they change their business. Now, the wild card here is you talk to a lot of people on the street, if the economy slows down, how does Target do? Because they do have more discretionary risk, let's say, compared to dollar stores and a Walmart.
I just wanted to say my piece for Beyond Meat, which I advocated for. So my take on the award is that you could go two ways. I think Target, we went with operational excellence. I think Beyond Meat is like when you look back at the 2019 market, what is the stock that summarizes what the year was all about? And this stock chart tells a pretty wild story, a pretty irrational story in many ways. And to me, it's been such a funny year in the market, Andy, and Beyond Meat to me is the funniest story.
Well, you know, that sort of speaks to this Time Magazine's Person of the Year award conundrum, which is to say, can it be a bad guy? And the answer with Time is yes, it can. I mean, Adolf Hitler was, and Osama bin Laden was as well. And we wrestle with that. So in other words, like what would be emblematic of the year would be a FANG in a way, or a new IPO, one of the big IPOs, to your point, Miles. But we also have kind of, shall we say, a uncompany of the year list as well.
Yes,
that we'll be discussing over the next few days, I would imagine. So there's room and opportunity to be on that list too.
Fortunately for Target and CEO Brian Cornell, they're not on the
list
company of the list so far.
Time to do some more digging into Target, the 2019 Yahoo Finance Company of the Year. Profits and growth for the retail giant continue to thrive due to its customer service efforts. And if there's one person confident about its place in the retail world, it's CEO Brian Cornell. Let's take a listen.
I think the big difference, and I've talked a lot about the investments we made, and you brought us back to February of 2017. The single most important investment we made was in our team. And I think what brings our brand to life are those team members who each and every day are out there interfacing with our guests. And it's the magic in our business model where we've invested in our team. We took a very bold stance with our starting minimum wage. And back on that day of February of 2017, I said, we're going to move to a starting minimum wage of $15 by 2020. It's allowed us to attract and retain great talent. We make a major investment in training and development, and we're attracting the best team in retail. So what's different about our model is it's all about our stores and our team. So you think about the growth we've seen in digital. Well, most of that digital fulfillment happens in a physical store like this one. Whether it's order online and picking up, and there's a Target member waiting for you, or driving into one of our 1,700 parking lots, and within 2 minutes, one of our team members walks out to your car and says, thank you for shopping. And the kids are still in their car seats, getting ready to drive home. Most of our fulfillment takes place in that back room where we pick, prep, and pack and ship from that local store to your home. And we're in everybody's neighborhood, so it's quick and easy. So the investment we've made in our team and the belief that today's consumer still values that human touch, I think that's what sets us apart from many of our competitors.
So how is Target doing this right now at a time where the unemployment rate is as low as it's been in 50 years?
Well, Cornell mentioned there February 28th, 2017. That was a key analyst day for Target. I was in the room, and I think a lot of people in that room were stunned when he came out and said, hey, we're investing $7 billion over the next 3 years in our people, in our processes, and remodeling our stores. They were also lost in that release. They were taking their wages. He promised $15 an hour by 2020, and he is attracting very strong talent to those retail stores.
So, and I know you know a lot about Walmart, which the biggest private employer, million. I think it's over 2 million, I think, internationally.
Internationally, yeah.
Target has about 350,000 employees. So as they grow, they're the company of the year now, but people are still getting in. Is this something that's a headwind for a company as they kind of try and scale to that? Or if they figured out the secret sauce now, are they okay?
Totally. I mean, it is a huge challenge. I was at a restaurant, you guys, over the weekend, and I couldn't get a reservation. I finally got in. The tables weren't filled. I said, so how come I can't get a table? He goes, I don't have enough people to work here, right? And so I don't want to have bad service. Yeah. So and I said, Jesus, this is what it's coming to. And so you can understand that. And the real differentiator is going to be how you treat your employees. And so that is going to be, and money is one thing, but culture is another. I know it sounds a little hokey, but I mean, they've got a bit of a culture. And so I think that's probably going to help them.
There's bad news for guys. It's JCPenney, it's Macy's, who don't have the money to pay $15 an hour to attract some of the best names in retail, like Target and even Walmart is doing.
Well, and I also think about, a story that comes up with one of Target's main competitors, Amazon, which doesn't come up with Target, which is the warehouse workers and those conditions, because Heidi, such a big part of Target's online business is actually out of the store, right? Exactly. They're actually doing the omni-channel thing that every analyst said was the future years ago. And I think that comes to saying, all right, you're making $15 an hour, you were on the floor, now you're in the back fulfilling online orders, but it doesn't have the same kind of environment that I think you see with some of these bigger retail names.
Yeah, that's exactly right, because every Target store is a fulfillment center, right? So when I place an order online and I expect to get it in 2 days, it doesn't matter where it's coming from. The fact that Target will find it in any of its physical stores, package it up, and send it to you, not only does that save space by not having to just get a fulfillment center altogether, but also you don't have to hire anyone new to work in said fulfillment center. So I think that strategy has truly paid off for them. And
okay, they're picking your order right now. Look at that. There we go.
There you go. No, and at first I had a complaint as a consumer because I was getting so many packages with one product in them. But I realized the entire strategy there was it doesn't matter how they're getting it to you or where it's coming from, but they're going to put it in your hands in the time frame that they promised as quickly as possible.
All right, so we've talked a lot about Target's success over the last year and a half. Coming up after the break, we'll talk about whether Target can stay ahead of the game in the years ahead, or will Walmart and Amazon eat their lunch eventually? We'll discuss right after this.
2019 Yahoo Finance Company of the Year is Target. Brian Sazzi, one of the things that you discussed with Target CEO Brian Cornell was the future of the company as it nears this current investment cycle. Here's what Cornell had to say about whether Target's big spending will continue.
So you're nearing, I believe, the end of this $7 billion investment cycle. What does the next cycle look like?
Well, it's going to look a lot like it did the last couple of years. We'll continue to invest in remodeling stores, in building new small formats. We'll invest in our brands. We'll continue to build out our fulfillment capabilities, and we'll invest in our team. So our strategy isn't going to change. We're going to continue to work with great vendor partners and bring some new partners into the mix. We'll bring great innovation and excitement into our stores, into our digital channels. But the strategy we have in place right now, it's still in the early stages. We've got a lot more work to do, and we'll continue to invest in remodeling stores and building new stores in urban centers and on college campuses, introducing some great new own brands and national brands, continue to strengthen our ability to fulfill any way you want, and we'll continue to invest in our team.
Is it another $7 billion investment?
Well, you'll continue to see us spend, probably in the neighborhood of $3 billion of capital a year. So we said, that's what it's going to take to remodel stores and continue to invest in our business. Over time, we'll probably go from remodeling 200 or 300 stores to 150 to 200, but we're always going to invest in our stores and make sure we bring this inspiration, the newness, the excitement to our guests across the country.
So we've got a new Target coming to the Upper West Side.
We do?
There's a new one on the Upper East.
All
Square?
these neighborhood stores, and they're saying that the neighborhood stores help them reach a higher income consumer, that they are able to get into neighborhoods where people are going to spend more. How long can they play this out until other people are catching on to it?
I think they're dead set on really tackling urban markets. Think what we have in most urban markets. It's Walgreens, it's CVS. They don't offer a great assortment. In many cases, they're overpriced. Also, too, these stores will also serve as fulfillment centers, and they can help you with same-day delivery services.
Yeah, I think like places like Bed Bath & Beyond, the bloom is off the rose there. There were local chains. So, you know, you certainly don't see Walmarts. And so, you know, maybe it's a nice strategy, right?
Well, and Jen, you and I were talking earlier about the acquisitions during this cycle. I mean, so as you asked, you know, Cornell about the $7 billion investment, he sort of demurred at saying what would be next for them, but is it an acquisition? I mean, I don't think they're going to spin anything out really, but, you know, what do you think they want to be in next?
Yeah, it's funny you mention that because they did take that stake about a year and a half ago or 2 years in Casper, so that's out there. They haven't talked much about that, so it's unclear if they would go out and buy that. Yeah. Also, too, about 2 years ago, there was a pretty decent rumor that they would be interested in Sprouts Farmers Market to help boost their grocery capabilities. Yeah. Those things, they've quieted down, but they were out there.
Brian, where do you think the most growth is going to be from this company? Is it going to be on the grocery side? Is it going to be on potentially toys? Where are they looking to really grow? What's their next phase?
Well, here's one. I think there is an announcement coming in January, athletic wear. Some rumors regarding potentially Nike. I don't think it's Nike, but it's going to probably come within the first 2 weeks of January.
So we had, I think it was last year, Gene Munster from Loop was saying someone was going to buy Target. Now stock's up 90% this year. So the big rumor had been Amazon's going to take out Target. Is Target even a idea that somebody could take this out now?
I think that'd be irresponsible for the Amazon board to allow that deal to happen. Or for the Target board, excuse me. Opposite. If I'm the Target board, I want to remain Target because I think people are souring on the Amazon experience. Target has much tighter control of what's on their online platform.
I can't even see that getting approved.
Oh, Trump will approve anything these days.
I mean, this was
Disney bought Fox.
The only thing they look at is consumer harm now, right? Will that make prices go up?
Yeah.
No, will not.
No way.
Right.
Yeah.
But, you know, then Amazon will trot out its market share number.
Right.
Overall retail, which is really small.
Yeah.
But, you know, Amazon has left brands alone, right? Like Zappos.
Yeah.
Right? So, great idea. Who was it? Your idea?
Warren Buffett, hope he's listening.
No, Gene Munster had his idea. Well,
it's Heidi's idea.
A big tech company.
What's the company of the year in 2020?
Oh.
Maybe Beyond Meat if they could deliver some profits.
We could do Beyond Meat.
Can't rule it out.
It's gonna not have a U shape.
One name we didn't.
You know who
one name we
had a
didn't mention this year. P&G. P&G stock has skyrocketed. That was my choice in my back pocket.
It really is a lot of
Another name that we didn't
comebacks,
mention,
yes.
but it doesn't come up on a screen because it's not in the S&P 500, but maybe it'll have a good year next year, and it's had a great year, is Snap. And Snap could take it, some of those other social media names.
All right, there we go.
There we go. And I mean, of course, psychedelics are going to be huge.
That's right.
Oh my God! Here we go again.
Andy, that comes up every meeting.
10 years of tripping with Ken Rogers.
Andy Serwer, Brian Sozzi, Heidi Chung.